What would you highlight here?
Yeah, the thing about Texas Instruments is that they manufacture 80% of the chips that they offer to customers themselves. They don't outsource to a third party. And they were talking about that key word that we've learned about since the start of the year, lead times. In other words, the time it takes from a customer ordering chips to the time it takes for the company to deliver them. They said that in the first quarter, they still had hotspots in different industries where lead times got extended. But the good news is those lead times are now steady, and that they're able to actually offer a number of off-the-shelf chips. In other words, they have inventory. So that will be a really interesting sign to people watching the global economy. Really, Texas Instruments is a bellwether because some of its customers are very heavy industrial companies. They're automotive companies. They service such a broad range of industry in a number of jurisdictions that demand for their chips, the old-fashioned industrial types, are really what gives us a sign of how the economy is firing going forward. On the AMD side, there was less commentary on that, although they gave such a bullish forecast for the year that it seems like demand is still very strong.
So talk about the chip shortage in particular. We just heard Elon Musk there talking about how this is impacting Tesla. I mean, this is impacting so many different businesses around the world, impacting consumers and you know, what we have access to as we're going through this major transformation and transition back to work, back to school. I mean, any additional outlook or insight or fresh commentary on when this will let up?
So this is where you start to read the tea leaves, because Texas Instruments gave a forecast for the year that was in line, bang in line with analyst estimates. They didn't raise their guidance in terms of the sales that they expect to make. They didn't give any specific bullish outlook on particular customers. The thinking from Wall Street on that is that the demand that we thought was there, particularly from the automotive industry that had to cut production of cars because of a shortage of chips, it just actually isn't as extreme as we thought. There's exactly the same thinking that you've just outlined, that actually we're now starting to return to work. We're starting to return to school. So that extreme growth in demand for laptops, for tablets, for smartphones, well, if they're not raising their forecast for chips that provide for those things, then maybe the demand's not as bad as we thought, and the supply equation will level out in due course.
So let's talk about AMD then in particular, which is not reliant on TSMC to manufacture its chips. How did the AMD story play out?
So the AMD story is opposite to Texas Instruments. They gave a very bullish outlook for the rest of the year. 3 months ago, they said that sales would rise by 37% in fiscal 21. They upgraded that to 50% in fiscal 21. And the feeling here is that the demand for what they're offering is really strong. But there's a subplot. I love a subplot. Remember when Intel had earnings a few days ago or a few weeks ago? They saw their shares fall, and the concern was that AMD was stealing market share from Intel because Intel said that its data center business was weak, and yet you have AMD here today saying, oh, our data center business is pretty strong. The CEO of AMD has really transformed the company's offering in recent years. It's made the product more cutting edge. They do some business with Taiwan Semiconductor, so they are reliant on some of the third-party manufacturing, but again, it's a case of reading the tea leaves because there's no explicit commentary yet from executives. It seems like AMD is doing well, A, because of broad-based demand, and B, because they may be stealing market share from Intel, which is not good news for Pat Gelsinger.